All right, makes sense. I want to talk more about the U.S. strategic reserve, doing that in Bitcoin. If you had time to sit down with President Trump, what exactly would you advise him to do?
Now, this is the Bitcoin wet dream we've all been waiting for. Release Michael Saylor.
I would say that money decomposed into currency and capital. The US dollar is the world's reserve currency. Bitcoin is emerging as the world's reserve capital. Gold used to be the world's reserve capital network. Gold became ineffective in the 20th century. Bitcoin is becoming the digital gold of the 21st century. You understand gold and you understand digital gold. If you want the US to remain the world's greatest power, the economic leader, then your agenda ought to be economic and technical leadership. That means create a regulated stable coin, make it possible for a US bank or a US company to issue a dollar-backed stable coin like Tether, like Circle. Create a regulatory environment, a digital assets framework, if you will, where Tether can relocate to the US, and then expand the stablecoin market from $150 billion to $10 trillion. And you will create $10 trillion of demand for US treasuries custodied in a
How do you
US
do that,
bank.
though?
The demand, how do you create the demand? To create the demand because there's $10 trillion of stable coins issued. The reason there's $10 trillion of stable coins issued is because American companies can do it. Are you asking why will people want to buy the stable coin?
If Bitcoin is the reserve capital of the 21st century, isn't it time the U.S. took the lead in shaping its digital future? A stablecoin framework could be the bridge between traditional finance and unstoppable innovation.
No. I'm saying how are we creating the stable coins? Are we locking up, are we backing it with securities, treasuries? Excuse me. Are we talking
Yeah,
about money
what I'm
printing?
saying is the U.S. should create a law that allows a U.S. bank or a U.S. corporation to issue a U.S. dollar stablecoin like USDC or USDT and back it with US dollar equivalents. The definition of the stable coin would be you have to hold US dollar equivalents. That would create the demand for $10 trillion of US treasury bills, right? The big idea
Well,
here.
make sure I understand. You're
Yeah.
saying if you back the stable coin with treasuries to the tune of $10 trillion.
No, I'm saying you define the law so that you have to do, it's not an if, it's the definition of digital currency is a token pegged to the dollar backed by US treasuries. That's the definition of the currency. That's what the
Okay, so
government
stable
should do.
coins are by definition tied to treasuries.
What I'm saying, not now. Like what I'm saying, you're asking me what the government should do. And what I'm
Right.
saying is the government should create a law that allows US companies and US banks to issue stable coins. And the definition of the stable coin, a stable coin is a digital currency.
By framing stablecoins as treasury-backed, Saylor proposes a system where the U.S. leads in digital finance while simultaneously creating substantial demand for U.S. treasuries. This could be a game changer for the global financial system, ensuring the dollar remains at the center of digital transactions and offering a new avenue for U.S. economic growth.
The definition of the digital currency is a token pegged to the dollar, backed by US dollar equivalents sitting in a US bank. That's missing right now. That doesn't exist. The reason that Tether is not in the US is because it is impossible for Tether to come to the US and do that thing. If the US did that, then the stablecoin float would go from 150 billion to a trillion to 10 trillion. And the US dollar would become the world reserve digital currency on every iPhone and every Android phone and everywhere in the world. And
So I know if
that's,
I'm going crazy, are you are you picking numbers just sort of randomly, or is there math that backs up it would go to 10 trillion?
That's what I think it would do. That's the demand for that asset, 10 trillion. Because there's $900 trillion of wealth in the world. We could go back to the Croesus chart. About 450 trillion of it is for assets held for use, for their use case, and the other 450 trillion is store of value. But you can see it's pretty easy to get to 10 trillion. Are you suggesting that's too much or too little?
No, I'm just trying to track whether that number is tied to something that I should already be aware of, or if you're just giving an example.
It's 1% of the global economy, right? 1% of the global economy wants to be a medium of exchange in the dollar. Yeah. So we can stipulate it's my opinion, if you like. You asked me what advice I'd give the administration, though. So I'm giving you my advice, which is you want the US dollar to be the world's reserve currency, and you want the US to own the world's reserve capital network. For the US dollar to be the world's reserve digital currency, if you want to be the world's reserve currency and you want to cement your control for the next 100 years, then you want the US dollar to move at the speed of light on billions and billions of devices. Okay, how do you do it? You need a stable coin backed by US dollar equivalents. Who should issue it? A company in the US. Either a bank or a public company like Circle, right? And how do you ensure it's good for the dollar?
Setting a legal framework for U.S. companies to issue dollar-backed stablecoins would fundamentally shift the power dynamics of global finance. Saylor's projection of a $10 trillion market isn't just theory. It's based on solid demand for digital currencies as a store of value. The U.S. would have a chance to solidify its place as the world's reserve currency, but it requires bold action and fast implementation.
Well, you just make sure that it's pegged 1-for-1 to US dollar equivalents. Now let's go to Bitcoin. Bitcoin isn't medium exchange. It isn't the currency. It's capital. It's digital gold. What the government ought to do is sell their gold. They have $600 billion of gold. They ought to just sell it and buy Bitcoin with it. And you could buy 20 or 25% of the Bitcoin network with the proceeds from selling the gold. The goal ought to be for the US just to buy 4 or 5 million Bitcoin. After you do that, you've demonetized the gold network. So the gold network is the 19th century world reserve capital network. You might as well just sell it all. The people that will own it will be the enemies of the United States. And the gold network will go from being worth $20 trillion to being worth $4 trillion or $3 trillion. You'll just drive it into the ground. Gold will go to $200-300 an ounce. And anybody holding gold as a reserve asset is bankrupted or has a worthless rock, just a shiny, heavy rock. And you're buying Bitcoin in the swap, and then Bitcoin goes to hundreds of trillions of dollars a coin, and you end up with $50 trillion to $100 trillion of capital. And then what happens to the U.S.? The U.S. becomes the economic leader of the world for the next 100 years. We're the richest country in the world. We negate the entire debt. If you generate a $50 trillion capital gain with Bitcoin, you offset the existing national debt and you become a net creditor nation. And the dollar permeates everywhere. Okay, what's going to pay for this, Tom? Well, first of all, everybody with CNY or rubles or any African currency, any South American currency, even the euro, they're probably just going to trade all their currency for the US dollars, for the digital currency of the US. Second, anybody with capital assets outside the US that can't get access to the dollar to capitalize their company, they're going to use the stable coins to capitalize their entity. So you're going to have capital flows from currency, and you're going to have a lot of other capital flows. There's a lot of people in the world, in Cuba, in Venezuela, in Argentina. They would sell their real estate. They would sell their equity. They would sell their currency. They would sell their bonds just to buy the US dollar. I mean, that's been proven in Argentina. That's been proven in Turkey. That's proven in Lebanon. So you'll have a lot of currency, a lot of money just flow into the US dollar via the stable coin. by the way, an anecdote is, in Europe, if Europeans are given a choice between the digital euro and the digital dollar, they 99% of the time choose the dollar.
Saylor's proposal to swap U.S. gold reserves for Bitcoin is a bold move toward the future. By converting gold into Bitcoin, the U.S. could solidify its economic position for the next century. But it's not just about Bitcoin's price appreciation. It's about positioning the U.S. as the dominant player in the digital economy. It's a move that could radically reshape global capital flows and put the U.S. in a unique position to lead the digital age.
That means people in France and Germany and Italy and Greece want the dollar. Now, if I go to China and I give them a choice between the digital CNY and the digital dollar, the vast majority of the money chooses the dollar. That's why it's illegal. That's why the Chinese have a law making it illegal for you to trade crypto, because everybody wants it so bad, they would all buy it. So we're talking about economic physics now, right? Capital flow, money, water flows downhill and money flows to its most secure, best home. So on the capital side, with regard to Bitcoin, what would happen is everybody in Africa, South America, Asia, they would all dump their physical assets and their low quality bonds, currencies, real estate, equity, and they would buy Bitcoin, because everybody would rather have a piece of cyber Manhattan. They would all rather be in the US. They'd all rather have the high quality property, but they can't buy it. They can't physically. It's illegal do you know it's illegal in Nigeria for you to hold dollars?
I did not.
There's a lot of countries, it's illegal in China for you to trade in US stocks or buy dollars. So there are a lot of places you can figure it's probably illegal in Russia too. I think most places in the world, they have capital controls, and the capital controls can range from you can't take your money out of the country to you can't even hold those foreign assets.
Saylor's take on global demand for the U.S. dollar underscores the currency's dominance, even in countries where it is restricted. The idea that, in countries like China or Nigeria, people would rather hold U.S. dollars or Bitcoin as a safer store of value is compelling. With the rise of digital currencies and growing distrust in local currencies, Saylor is highlighting the gravitational pull of the U.S. dollar as a global safe haven. The notion that money, like water, flows to its most secure and valuable home is an apt analogy. If people could freely exchange low-quality assets or currencies for Bitcoin or the U.S. dollar, many would, especially in regions with unstable financial systems. This could drive massive shifts in global capital flows, further cementing the U.S. dollar as the world's digital currency.